Well, it was a spooky start to Halloween night. The market did sell off quite a bit. The Nasdaq down 2.76%. The S&P 500 we haven't seen for quite some time. That was down 1.86% on the day. This is led by tech, some consumer discretionary. The tech sector was down a whopping 3.21%. So we're going to take a look at market conditions and where a lot of these bigger names, including the index products SPY, Qs, and IWM, where they stand within their weekly expected moves. And then we're going to keep right to it and then call it a night. We're going to first take a look at gamma levels. This level over here, 6,000, that is the call wall. That is the larger area of concentration to the upside that traders are still reaching out to. And then down beneath us, 5,700 is the level to pay very close attention to. And if I were to apply this on a chart and show you, what you'll see here is we are in and around that 5,700 level. So if we want to come down there or undercut it, watch for price to potentially base out to find some sort of a footing in and around this level. We do have a couple names that are reporting, that have reported already after the bell, and that was Amazon and Apple. Apple's slightly down in the after hours, and Amazon is currently up as it stands. Now, the expected moves going into tomorrow are gigantic. And, well, why is that? Well, we do have a big macro report coming out. We have non-farm payrolls, the unemployment rate, and then we also have 30 minutes after the open, ISM manufacturing. So I wanted to hop into TrendSpider app here, the charting software, and I wanted to show you where we kind of stand overall as far as the 5-day moving average goes and where we are within these weekly expected moves. Now, today, we closed, boom, spot on to the weekly expected move. And if I go to the after hours, we're kind of just doodling in and around there. And this comes after, obviously, getting the earnings report. So we are right there at that weekly expected move, which is the level that the market, the options market, prices in as far as forward-looking risk goes. Now, yesterday I made a quick note on the Discord group saying that, below a week-to-day anchor volume weighted average price, below a 5-day moving average is time to be patient. Did I know that a day like this was going to occur? No, of course not. Nobody did. But this is why we have to proceed with caution when we look over here at our various indices products and we start to see them below the 5-day moving average or starting to turn yellow, because that indicates a potential change in the trend. So if we go to SPY, I would imagine that if we don't, come in after the report, unless if the market finds it to be very bullish, we can doodle in and around the weekly expected move. The daily implied move for SPY tomorrow is 574 and some change, and the daily VIX implied move is 576.94. Now, we did cut through both of these on today's trading day. When you look at the market net flow for the day, it was basically telling you, and I was live during this session too, where we said basically here at the time of the day, it was roughly the best chances other than this, but we had a red cumulative net premium line over here of puts, green is the cumulative net premiums of calls, and we were diverging through the bulk of the day, and we saw some relief every once in a while, but then we went right back to red. So overall, this right here was a tool that you should have been paying very close attention to on today's trading session. Now, I want to go ahead and continue on and hop over to some other index products, the Qs, right? The Qs came down and reached to its weekly expected move. So tomorrow, the daily expected move and the VXN daily expected move, which is the volatility index for that, it's basically ranged between 470, I'm just going to round it to 478. You can screenshot it if you want those numbers, and then 476 right there. So if we start to get a bounce back up, these levels could potentially act as levels of resistance or potentially cap the market if we start coming back up into these ranges. And even if we do come back into these ranges where it can make for good day trade or intraday trades, just be aware that you're still under that 5-day moving average. That's the Qs. I want to hop over to the IWM. The IWM is not near its weekly expected move. So the IWM is pretty much a wide open space. We're slightly down actually on the trading week. The lower levels over here is for the lower weekly expected move. The RVX, which is the Russell volatility daily implied move, and then you have the daily implied move there too, but based off of the 0-day options. And then to the upside, if the market wants to turn back around, we would be coming back into the week-to-date anchored volume weighted average price, and that 5-day moving average would continue to be declining at that given point in time. Okay, so there's what the levels are going into tomorrow. We're already at the lower weekly expected move in some big products. We got through the earnings, and this is pretty impressive because what's it telling me is we got through earnings, on some big names, right? All the names combined, we can look at that. We've got through Google, Microsoft, Meta, Amazon, and Apple. So we're through that. We have one more trading day left, one more little big piece of macro data. But the market priced in this implied move for the week. It was about $10 and some change. And where are we right now getting through all those earnings? We are right there at the weekly expected move. So this tells me that the market is actually acting in this current context efficiently. Okay? So we will see here how the day starts and progresses into tomorrow's trade. Let's look at some larger market cap names now to see what they are doing from a weekly basis. Now we had Apple. Apple is close to its lower weekly expected move. It did report earnings. So if I hop over here, you can see we're currently trading under the weekly expected move. The earnings implied move was slightly lower than that, so just be aware of that. But we're right there on Apple for the lower implied move, and we're below that declining 5-day moving average. Apple, Microsoft. So Microsoft, we'll hop over to Microsoft. You can see Microsoft, we got through earnings already. It is trading in and around its lower weekly implied move as it stands right now. So I'm just kind of thinking here, is downside going to be somewhat limited into tomorrow's trade? And is this potentially a shakeout? And if it is, this 5,700 level that we previously talked about can be a very key level on the S&P 500 as price has been kind of cutting through. Okay, so that's Microsoft. We'll hop back over and we'll look at Google. Take a look at Google. Google, after earnings, went through its upper weekly expected move and we're trading back into an inclining 5-day moving average. So this one also, right, it's kind of just consolidating here. So potentially a trend break of this high over here could potentially push it to the week-to-date anchored volume weighted average price and maybe continue this move here on Google. Amazon also reported here after the bell. This was the weekly expected move. Let's take a look at where it's at after hours. And you can see Amazon is doing good so far after the earnings report. So it looks like it'll come strike up here at that upper weekly expected move coming into tomorrow's trading session. So yeah, Apple, that's not really down all too much as it stands in this current moment. That reported is obviously a big weight. It's holding up, kind of rather well. So at least so far, Amazon's doing really well after the bell. So it's going to be interesting to see, how the market is going to really play out tomorrow. It looks like we can potentially, if the market likes that macro report, we could be in for a little bit of a bounce into some of those declining 5-day moving averages as we previously discussed. Now, what else makes me think that if that's the case? Well, like I said, a big put wall right here, so limited downside. So this is not the area where I'd short. We're at some weekly expected moves, the implied moves. So that could present itself as a potential area where we can very well see bounces. And then on top of that, we're in negative gamma territory. So when we're in negative gamma territory, selling begets selling, volatility typically increases, right? If I hop over here and I look at the VIX, take a look, right? We crossed negative gamma territory in the aftermarket session. And since that point, volatility took up. If I go to the daily time frame and I share you the VIX chart, you can see that when we go into negative gamma territory, we see that spike up. Right? And then it comes off and we get out of negative gamma territory. We go into negative gamma territory, boom, then we get out, and then so forth down the list, and it goes back further, okay? So we're currently in negative gamma territory. We'll see if that actually updates. We're floating in and around, at least as it stands, about 5720, not too far off of that 5700. Earlier on some prior videos, my thought was that we can get to 6,000, and I still kind of believe that, but I don't know the path to get there. So what I would like to see is kind of what we're seeing right now, where we get some sort of spooky sell-off, scare-off, maybe go through 5750, which we did, and then for it to turn back around and show some strength, potentially get back above the gamma flip line and back above some of those rising 5-day moving averages to show us that the market is going to prove itself, and then we can potentially play from that point to see its rally into and around that call wall of 6,000, which also happens to be that JPM a collar. That's all I got for you on today's episode. Hope it helps out. Have a safe Halloween. Hope you get to go see some friends and family. See you later.